Morning, everyone. Happy Friday. It's the 25th of June. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate. All right.
Yeah, not too bad, thank you. Okay, so we've made it to the end of the week. Been a bit interesting. Certainly a few bits going on to keep us all interested from a trading perspective. In terms of news and what the latest is, we saw a bit of relaxation on the UK travel restrictions. So, Steve, we can all go to Ibiza on our summer holidays, which is good news.
Boom. Get in there.
Yeah, so Malta, Balearic Islands have been added to the green list, so they are now quarantine-free destinations. And we're going to be pushing ahead with some countries that will be singled out with, again, quarantine-free destinations for people that have been fully vaccinated. So pushing ahead quite nicely. And Germany and France, though, they've signalled that they're going to try and put some blocks in place for the peak tourist season. So prevent people from coming in or making it difficult for them. The pair have also blasted Greece and other tourism-dependent nations for taking a lax attitude to accepting visitors. So potentially some tensions there, and obviously we'll have to wait and see what goes ahead with Europe. In terms of what's going on in the US, the President Biden has reached a tentative bipartisan deal with senators for a $579 billion infrastructure plan, which he said will create jobs and fulfilling a major part of his economic agenda. So that looks to be pushing through. In terms of earnings, there's been an update from two US companies overnight. Nike soared after its forecast for its fiscal year revenue will top $50 billion for the first time as it benefits from the rebound in North America. That has probably had a knock-on effect, on a thought, for a number of sports chains in other parts of the world. I've seen JD Sports are higher today, and Adidas and Puma as well. And also FedEx, although that went in the opposite direction, it said that rising costs driven by surging parcel deliveries threatens to curtail profits, which Wall Street is expecting. So that's sent the other way. There's also been a bit of a cooling off in some of the meme stocks. We've seen Panasonic has reportedly sold all of its shares in Tesla, for which it's made 9 times its investment, so done pretty well out of that. GameStop sold another 5 million of its own shares, raising 1.1 billion in the process, to add to the 551 million it generated in a similar move in April. So that's trading at 173 times its 24-month forward estimates. So very hot in terms of valuation. And if you're seeing the company taken out, then maybe we'll see others follow suit. Tesla's trading at 92 times its 24 forward month estimated earnings. So a bit of a cooling off process potentially ahead for some of these meme stocks. So that's pretty much it on the news front. Let's have a look at some of the charts, shall we, Steve? What's taking your fancy this morning?
Just one question I had was, obviously travel restrictions got on the green list or whatever, but what about the countries that we've put on the green list? Do they necessarily want us to go there, or will allow us there without having some restriction?
I would have thought if we've put them on the green list, there would be some sort of two-way agreement in place, maybe. Okay. Obviously, France and Germany aren't on that list as of yet. So, maybe if people do travel there, maybe we might have a more lenient approach, but potentially the French and the Germans might make it more difficult once you're at the other side.
Maybe they'll sort of say, right, if you want to go to Ibiza, you've got to fly around the French and German airspace, obviously the French airspace.
Have to get a boat.
Yeah, I'm just thinking, sort of like, say someone doesn't like flying, they've got to like walk through France to get to Ibiza.
You can't walk to Ibiza anyway, can you? Or you have to get the boat across from Barcelona. Who? Sorry, I don't recognise him.
Sorry, Mo Salah, I meant. Sorry.
Yeah, right. Yeah.
Let's get on to the markets. Start with indices. I think I got a bit of a kick in the game yesterday with the underhead challenge. Obviously, I've been very focused on the weekly candles on the indices, and the negative weekly candles from last week. We've seen just a grind back higher in most of the indices. So that bearish outside candle from last week. It looks to be failing. It hasn't failed yet, but obviously if we get a close above 71.56, say, in the FTSE, then that's pretty much a positive. 71.40 is the high from this morning, and obviously from this week, yeah, 71.56. So we need to recapture that ground anyway from last week's close, and that'll create a bullish engulfing candle, unless we actually manage to take last week's high at 72.18 today. But we're running out of time for that, and that will create a bullish outside candle, which will be very bullish indeed, because we're at the all-time, not all-time highs for FTSE, but all-time highs for some of the indices. DAX, interesting one. I was short of this for most of the week. I've been stopped out on that this morning, brought my stop down, stopped out. Feels like that there is potential for another move higher. Again, look at the weekly chart. This is the candle that's really sort of drove my decision to be short of it this week, and really hasn't sort of had the follow through that I was hoping for. Had some follow through early in the week, but that's fought back really nicely. So the indices slightly on the front foot this morning. The 4-hour chart has created a bearish outside candle, so slightly negative, but really need to break down below the 15,540 for the sort of like the bears to sort of like win through on that on a short-term basis. Dow Jones on the 4-hour chart, we've just posted another high, not far away from the all-time highs on the Dow Jones. Yeah, and you can see again on the weekly chart that bearish engulfing, followed by a real nice follow through weekly bearish candle. But then the 33,230 formed a decent level. We poked our head through it, or poked our tail through it now, because we're looking the other way. And this is pushing higher again, Dow Jones. NASDAQ all-time highs. This continues to push. We believe we're in wave 3, so still more to come from NASDAQ potentially. Yeah, can't really sort of like, maybe we could make this the wave 3, this the wave 4, and we're in the maybe the 5th and final wave potentially. It just feels like it could go on forever. And we had topping candles on the S&Ps, but look now, this bullish outside candle on the S&Ps is that signaling the way we're going. It's a pretty decent recovery from last week's shoddy show. ASX 200, the Aussie, very sort of like commodity based type index. We can start to redraw a line here and say the expanding wedge continues to expand to the top side. So shooting star candle formed last week, but it hasn't had the follow through this week, so potential to negate that. China 50, again, this is looking pretty sick, but we're sort of like back up towards the 17,773 level, which provided great resistance for 4 weekly candles until we punched through it. We've come back, retested, we've jumped back into the channel, but look very sort of like convinced as though we're going to recapture that ground again above the channel. So for me, a close above 17,775 on the China 50 is very positive for next week. You don't know how much it hurts to be sort of positive on indices. However, there are opportunities during the week where you know, even the bears can sort of like make good money out of them. Couple of really decent candles on the weekly chart for the Hang Seng, and again the Nikkei looking pretty positive, although we do have downward trending resistance up at 29,700. So that sort of covers the indices. I'll pop along to crude, because crude continues the 5th and final wave of this impulsive move higher that we've seen from the fallout from last year, and the in this chart, the move to $10, we've seen a fantastic impulsive move higher. Resistance coming in really around 76.80, 73.27. It's getting closer and closer. So we're only $3.50 away from that. Brent crude has a downward trending resistance at 77.68, so that'll be quite a similar level, although the comparable swing high comes in a lot higher than that, about $11 higher than that. So I think this will provide more of a test, and that is maybe a step too far. Natural gas is something I've been looking at, and we managed to sort of hit the target on the previous swing high, which I mentioned. We had this triangle formation. We broke out, closed above it. That was a buy signal. If you're a little bit more defensive, you'd look to buy the swing back, which it did swing back to this downward trending resistance line, the $3.20 area, and the target was 338 to 343, and we're trading there now. So that sort of like played out quite nicely. Gold, what's going on in gold? It sort of feels like it's getting ready for a bit of a shakeout. But you know what I feel about gold on a long-term basis, I'm bullish of it still. I still feel like it's an asset which should be in everyone's portfolio from a long-term basis. However, it's going through the ringer at the moment, and we can see that we've really fallen into this area of congestion around about the sort of 1755 to 1790 area. For me, this is really signaling a potential for a bearish flag. A bearish flag would have a measured move target all the way down to around about the 1580 area, but would definitely sort of have some hurdles to overcome, namely the 1676, which we had as a double bottom all that time ago. When was that? That was in March this year. Feels like a lifetime ago. We've had a sort of like triple top head and shoulders type formation form. We're below the neckline of 1848, 1840. And we haven't really managed to recapture ground above $1,800. So for me, that's really short-term short with stops above $1,800. Long-term, I'd be looking to buy this dip, which has got a little while before it plays out. Cryptos, let's have a look at Bitcoin. I'm still short of this and getting a bit frustrated with it. But we still seem to be in this corrective phase, sideways price action, backwards and forwards between the 28,788 and the 41,000 area. So this, for me, a break of either one of these will be significant. I'm going for my bias is for a break on the downside, just because of the supply and demand considerations, the type of market the crypto is. I still feel there's a lot more on the downside before we sort of like find a base. Have I covered everything? I think it feels like I've missed something.
You went through the indices, went through commodities, and you went through cryptos.
Yeah, I mean, this is just we're starting to do stocks as well, single stocks. Where this is a trade idea I posted yesterday. Really looking to buy around about 635 with a tight stop below the trend line, $600. Target for me is recovery all the way back to this sort of like interim swing high, 780. So yeah, that's didn't manage to get long yesterday. We're still waiting to get long. So we were looking to buy a dip. I think it was trading around about 650 yesterday, but it's managed to kick on, got up to just short of $700 Tesla. Yeah, that's me.
Nice, well done, Steve. Okay, onto the FX side of things then. Not really much to speak about yesterday. It was a pretty flat day, in all honesty. So dollar index first up, and as you can see, just here we've got a candle and a nice doji at that. So doji highlights indecision. We haven't really got anywhere from the previous session. I still like the fact that we're above this support level here at 91.43. So in my opinion, while we are remaining above that level, I think the outlook remains bullish for a continuation of this correction higher. And my first target's up at here, 93.02. So that remains the case. So nothing really to speak about on that front in terms of price action yesterday. Very much the same. And I imagine it'll be the same on euro dollar as it is. We are pushing a little bit higher today on this with a bit of euro strength. But we did have a bit of indecision yesterday, and really the day before as well. Volumes dropping off a little bit as well, following the bit of the uptick that we saw on the selling pressure last week. So again, I think upside will be limited to this level here at 119.86, potentially as high as 1.2026, but I'd be looking to sell into strength on that one, because I do believe that we're in the process of forming quite a large top here. It is only a potential one at the moment, and until we break this blue line, or in fact the red line below it, we can say that we're probably going to continue to see choppy price action. But for me, the bias is on the downside, and I'll be looking to fade any strength. If we look at cable, we can see yesterday quite nice from a technical perspective. This rallied into that resistance level, which we initially had as support at 139.85, and 2 days ago we saw it hit that level, just poke a little bit above it, but closed kind of flat. Yesterday we saw that backed up with a bit of selling, so that is for me quite a bearish sign, and we're seeing a bit of further weakness on that one today, led by sterling weakness. So for me, again, that's a case of selling into strength. Stop losses can be put above these levels here. I think probably safest to put above the high of this candle here from the 17th of June. But I'll be looking to target and move down to this next level of support, which comes down here at 136.70. If that level at 136.70 is to break, then what we would have confirmed on the daily chart is a double top pattern. So we've got the high here and the cluster of highs around here, with that high there being the main focus. If we take a measurement from this high here to this low, or what is now the neckline of this proposed double top pattern, then we can project to move lower down to this level here, which is at 130.97. So again, that would be supportive of dollar strength, and gives us an indication of where price could go on cable if dollar strength is to persist, and if this pattern is to eventually play out. New Zealand dollar, US dollar, New Zealand dollar bouncing from this support level. We did close just below this previous swing low here to potentially form some sort of top, but it's rejected that quite quickly. And for the last 5 sessions, we've seen quite a bit of improvement there. Got some resistance up here at 0.7122, so that remains a pivotal level for me to wait and see what happens. But certainly people seem to have dived back into these riskier assets like New Zealand dollar and Aussie dollar in recent sessions. And as you can see here with Aussie, despite probably, in my opinion, confirming the top with this breakdown here and this impulsive move to the downside, we are bouncing back quite a bit. So sometimes that does happen when you get kind of these fake out moves, and it does sort of have a little bit of a push to the upside. But I think that any upside will be limited to around about that level there, which I've just drawn in blue, which is at 76.45. So I think this bit of fun that it's having flushed out a load of participants here, could be coming to an end quite shortly, and I'd be thinking about getting short of that again for this head and shoulders top to play out. What else? So euro sterling has not been the most fun market to watch of late. We did see a breakout of this wedge back here in April, which I thought would start to see things kick on. We did a little bit, but then we've been sort of consolidating within this downtrend in recent weeks. It's just been grinding lower. But we have seen a bit of an uptick in the last 2 sessions. There hasn't really been any supportive volume. I've got my sort of last line of defense in terms of support here at 85.11, and it seems to have turned just in front of that, but maybe more chop and sideways price action to be seen on that. Euro yen, so this has been quite interesting. It's in a huge uptrend where euro has considerably outperformed the Japanese yen, but it did break this trend line. If we go down to these lows from the 7th of May and project that higher, multiple touch points along the way there, as you can see, confirming that trend line. We saw a nice break lower there on the 18th of June, and maybe what we're seeing now is a retest of this the reverse side of the trend line. I've also got a resistance level drawn here at 132.68, which it touched pretty much to the pip. And in the last couple of days, we see things stalling a little bit. So I'm maybe of the opinion that that's a little bit overdone, and may even take a look at that from a gun to the head perspective today for a potential reversal in the short term. I think that's pretty much it. So obviously we've been talking about dollar CAD, big breakout of this wedge or downtrend channel. reverse back a little bit. Need to see if the buyers are going to step back in. We could potentially get a pullback all the way down to here to test this support at 121.44. And what's going on with dollar Swiss. So that's just consolidating, not really been any movement in that since this big impulsive move to the upside, which began here on 16th of June. So still of the opinion that the dollar has the potential to move higher. We'll be looking to buy dips on the dollar index in the short term. And on the flip side of that, looking to fade things like euro dollar and anything related to the dollar. So fading potentially Aussie dollar and New Zealand dollar as well as cable. So that's my roundup on FX.
Cheers, mate.
Okay, so gun to the head trades from yesterday. Not much positive to speak about. I went short of Aussie yen. It was 9 ticks offside at 9 o'clock, down 0.45R. And as Steve mentioned, he was stopped out on Bitcoin yesterday. Despite remaining bearish, the intraday trade didn't work out on that one, but that's the nature of the game. Steve, what are you fancying today?
Really struggling, Joe. Can't tell you. I mean, I'm
Do you want
still.
me to have a go?
Yeah, you have a go first, and I'll try and.
Well, I'm not going to overthink it. I just talked about this euro yen setup, so I haven't looked at how it looks on the intraday basis, but just going at it from a daily perspective, we've seen this break of trend, which I had drawn on a moment ago, looking to see a retest of the underside of that. Over the last couple of sessions, we have rallied into this resistance level that I've got here at 132.68, and we've seen a bit of indecision. So let's just try and refine that a little bit. Okay, I've done a bit of drawing on it already. So into this resistance level here, bit of a channel forming, a corrective channel that could maybe end up being a flag if it does break out to the upside, but I'm quite confident looking at it from a daily perspective that we'll see this move lower. So we're going to sell it at 132.24, stop loss above these highs here at 132.76, targeting a move down to this swing low that we posted on the 21st of June at 130.05. So that is my trade of the day, looking for just under 4.5R.
Okay, cool.
That give you enough time?
Yeah, that did. I'm going to look at crude oil. It still feels like it's in the fifth and final wave. Well, it is in its fifth and final wave. And we've had a nice little reaction on the yesterday's bullish engulfing candle on the 4-hour chart. And we're just stalling slightly here, but the last hour has posted quite a nice Marabouzo type candle. So I'm going to go with a buy trade idea in oil schmoil. Getting in here 73.19. Ideally I'd like to get in at this sort of swing low level. However, let's put the stop in and put the target in 75.19. I think we're overreaching with that for on a daily basis. So maybe a little bit around there. 74.69 is my targets. Getting in at 73.19 now, and the stop is at 72.69. Actually, can I make the stop a bit tighter on that?
Do what you like.
Yeah, let's make the stop a bit tighter on that. 72.94 my stop. There we go. Really, really tight. And that improved our risk reward to 6-1.
Happy days. Okay. Best of luck with that then. So is there anything that's going to move these markets today that we need to be aware of? Just looking at key data points today at 1:30, we've got US personal income and spending and also the PCE index, both due out at 1:30 as I mentioned. And then at 3 o'clock, we have the Michigan consumer confidence figure to watch out for. So dollar seems to be the one that's going to be mostly impacted by data points today. That is pretty much it by the looks of things.
Okay, nice and sweet, short and sweet.
Yes, lovely. Okay, well, have a fantastic weekend, everybody. We will be back next week, and until then, trade safe.
Toodle pip.